technology investors are looking for the next great thing, and everybody, the consensus trade is AI. Everybody knows AI is the next thing, but now they're starting to realize that Bitcoin is also the next thing, and it's being lumped as a technology transformation and a digital disruption. This is really positive because this is going to draw lots of Magnificent Seven investors into our space. Public companies are capitalizing on Bitcoin. This is an extraordinary move, and of course we're seeing these every day. There's a new announcement. We've now got 950,000 Bitcoin that have been acquired by 160 different listed companies. And if we look at the trend, we were the first in 2020. There were two at the end of the year, and of course as you look at this trend right now, 160 when we're not even to the end of 2025 is extraordinary. So we're in a hyper growth or hyper adoption phase for Bitcoin as a treasury reserve asset.
Bitcoin has officially entered its hyper adoption phase, with corporations and financial giants securing nearly 1 million coins. The available supply has never been tighter. The market is entering a phase where scarcity itself becomes the driver of value. That's the latest message from Michael Saylor, Strategy's executive chairman. Bitcoin is no longer moving on retail speculation alone. Institutional capital is flooding in through ETFs, which have already absorbed over $170 billion, while public companies and government reserves are steadily locking away coins that will never return to circulation. According to Saylor, this is the clearest sign yet that Bitcoin is on the verge of a supply-driven price breakout unlike anything in its history. Make sure to stick around until the end of the video, as Michael Saylor breaks down why this moment could mark the beginning of Bitcoin's most aggressive price climb yet.
So I thought I'd start with a macro overview of the Bitcoin universe. And the first thing that I'll note is we have a very supportive White House, and that started with the establishment of the Bitcoin Strategic Reserve, but it continues across the board. Next. As you can see, we have 12 cabinet members in this administration that are all pro-Bitcoin. A year ago, we had one cabinet member who was neutral and 11 that were indifferent or uninterested and certainly not supportive. So this is a major change in the political landscape. The White House released a crypto policy report. It's about 150 pages long. I did a scan. I'm sure some of you have done a scan. The takeaway is that this administration is going to be very enthusiastic in its support of the entire crypto industry and the Bitcoin ecosystem. And in particular, some of the things they're doing include work in the area of taxation to cure unfair tax treatments of digital assets, and that includes, relief for de minimis digital asset transfers like de minimis Bitcoin payments, and it also includes guidance that digital assets should not be included when calculating CAMT unrealized capital gains taxes or when calculating CAMT minimum taxes. And so we have the support of the administration on this. I think this is just very positive for the entire crypto industry and very positive for Bitcoin. And of course, it's very positive for the hundreds of companies that are starting to put crypto assets on their balance sheet. Wall Street's embraced Bitcoin. We've now got 80 ETFs launched, $170 billion of value flowing into these ETFs. These continue to pick up steam, and they're growing more powerful day by day. Public companies are capitalizing on Bitcoin. This is an extraordinary move, and of course we're seeing these every day. There's a new announcement, whether it's coming from a pure Bitcoin company or whether it's coming from a hybrid or just a random new entrant. But we've now got 950,000 Bitcoin that have been acquired by 160 different listed companies. And if we look at the trend, we were the first in 2020. There were two at the end of the year. Then there were 33. 39, 43. There were 64 last year. And of course, as you look at this trend right now, 160 when we're not even to the end of 2025 is extraordinary. So we're in hyper growth or hyper adoption phase for Bitcoin as a treasury reserve asset. Companies are racing to get into the Bitcoin 100. You can see there's even competition to track the Bitcoin 100 right now. And generally, any given week, there are 20 or more companies that are acquiring more Bitcoin. Just a few minutes ago, Coinbase announced that they acquired more Bitcoin this quarter, thousands of Bitcoin. So I see very positive trends here. And each of these companies could, in theory, acquire just as much Bitcoin or attempt to acquire just as much Bitcoin in a dollar value as we have acquired. Obviously, they won't get 3% of the Bitcoin supply, but you can imagine what happens when 100 companies are all competing to acquire as much Bitcoin as possible. The analysts are all starting to cover and track Bitcoin, and they have outlooks for Bitcoin. So if you're going to cover the 160 Bitcoin companies that have Bitcoin on their balance sheet, you're going to have to form an opinion about Bitcoin. And so you can see that the average end of the year price forecast of an equity analyst covering MSTR is 168,000. And so keep that in mind, 168,000 by the end of the year. That's the consensus of the analyst community that tracks our stock right now. Technology investors are looking for the next great thing, and everybody, the consensus trade is AI. Everybody knows AI is the next thing, but now they're starting to realize that Bitcoin is also the next thing, and it's being lumped as a technology transformation and a digital disruption. This is really positive because this is going to draw lots of Magnificent Seven investors into our space. Financial regulators are embracing Bitcoin. You see a new positive Bitcoin announcement just about every other day now from all parts of the government. Just a few days ago, the SEC released a memo allowing in-kind creation and redemption of Bitcoin ETFs. This is a huge deal. This is going to accelerate the development of the industry. They also loosened restrictions on options trading of Bitcoin ETFs. Paul Atkins just gave a speech and made a number of comments about the digital assets industry. It's clear that he's very supportive of innovation, very supportive of the crypto economy, very supportive of your right to self-custody, and this is a welcome development from the SEC. Another welcome development is the guidance that came from William Pulte to Fannie Mae and Freddie Mac, where he said they should prepare their businesses to count cryptocurrency as an asset in a mortgage. This is going to accelerate the institutional adoption of Bitcoin as collateral in the banking industry. There could be no more legitimate driver of the collateralization of credit with Bitcoin than the U.S. Federal Housing Authority. Capitol Hill is embracing Bitcoin. There are 3 bills. One of them, the Genius Act, has already been passed. Clarity is coming in September, and the Bitcoin Act allows for the government to acquire 1 million Bitcoin. These are picking up momentum. This is a positive development. U.S. states are also embracing Bitcoin. We've now got 3 strategic Bitcoin reserves, including one in Texas just recently that was funded with $10 million. So this is a trend that's growing. International governments are enthusiastic about Bitcoin, and we're seeing this everywhere in the world with politicians in Ireland and the UK and Pakistan, in UAE, in Ukraine, etc. All of them making pro-Bitcoin moves. The crypto industry has coalesced around Bitcoin. There used to be some conflict 2-3 years ago. I think the previous administration played the crypto industry against the Bitcoin industry, and now they've come together, and It's pretty clear that Bitcoin is viewed as the foundation of the entire crypto economy. And we see that as really, really constructive for the growth of the entire industry.
The White House has officially released a sweeping plan to make the United States the global leader in digital assets. In a 168-page report called Strengthening American Leadership in Digital Financial Technology, the government urged regulators, tax officials, and lawmakers to create policies that support innovation and bring crypto fully into the financial system. The report compared blockchain and digital assets to the railroad and the early internet, framing crypto as a key part of what it calls a new American golden age. Saylor argues that these steps bring the US closer to hyper-Bitcoinization, a future where Bitcoin anchors wealth and the old financial system gradually loses relevance. And with hyper-Bitcoinization close, Saylor believes his company, Strategy, is positioned to become the premier bridge between Bitcoin and traditional capital markets. By using strategic leverage and carefully managing credit, Saylor argues that Strategy can help investors deliver multiple times Bitcoin's upside, turning the company into a high-powered vehicle for the next phase of global Bitcoin adoption. Now, let's watch more clips from Saylor as he breaks down how Strategy's Bitcoin strategy works, why it amplifies returns, and how he envisions it driving the next wave of adoption.
So that takes us to MSTR. What is MSTR? It's amplified Bitcoin, right? If you want more Bitcoin, if you want 2x Bitcoin or 3x or 4x the return and 4x the volatility of Bitcoin, you need a Bitcoin-backed equity. And we're aiming this for Magnificent Seven investors that they believe in the digital transformation of capital, right? We aim to be the Amazon of capital markets, right? Completely disrupt the business model. And you can see it in our metrics, where we're running 101% annualized performance 5 years in a row, right? In 10 days, it'll be 5 years. So doubling every year for 5 years, it's hard to say that's a fluke. And here's another illustration of amplified Bitcoin. You can see, bonds are underperforming, real estate's a 6%er, gold is a 10%er, the S&P is the cost of capital, 14%. The Mag 7 doubles that, Bitcoin doubles that, we double Bitcoin, right? And you can see in the last year, it's the same exact thing, right? Even more so. So I want to explain how we amplify Bitcoin. Okay, so we start with 199,000 Satoshis a share. And if we have no leverage, if we had no credit strategy, if we couldn't issue credit, then 10 years from now, we've got 199,000 Satoshis a share. That's like an ETF. That's a BTC factor of 1. But if we issue preferred that's equal to 10% of our Bitcoin assets, that's 10% leverage, it turns out that we have 267,000 Satoshis a share at the end of the period because we're not diluting the common stock as rapidly as we're building the Bitcoin. And if we go to 20% leverage, you see you end up with 376,000 Satoshis a share. And now let's go to 30% leverage. So you can see at 30% leverage, we would have 555,000 Satoshis per share. The green bars you see, that is the work that the treasury operation is doing. When people wonder what's the value added of a Bitcoin treasury company, it's the ability to create the green bar over the orange bar. And that's a 2.8 BTC factor. That means that, what does it mean? It means in essence, you would think that the floor for MNAV for a company that's got this sort of performance is 2.8, right? It's not the MNAV, but it's at least the floor. The MNAV of the company should be higher than 2.8. Now let's delve a little bit deeper into this idea. So I'm going to show you what happens as you increase the leverage in a Bitcoin treasury company like ours. You can see if we have 30% leverage and a Bitcoin appreciates at 30% ARR over the time period, you end up with an amplification of 2.8. You're getting 2.8 the Bitcoin performance, probably 2.8 the Bitcoin volatility, right? And you can see here, as Bitcoin grows faster, the amplification increases. If we hold the leverage constant, but Bitcoin grows at 50%, you're a 4.7 lever. And you can also see that if you hold the growth rate of Bitcoin constant, but increase the leverage, like we're growing Bitcoin at 30% a year, but we go to 50% leverage, now we're 7.8 amplified, a BTC factor of nearly 8. You're getting 8 times the performance of Bitcoin. In the extreme, if you go to 50% leverage and Bitcoin goes on a tear and grows 50% a year, you're getting 22x performance on the equity versus just holding the ETF. Let's take a different slice of this. If I have Bitcoin growing at 30% a year and my credit improves or the interest rates fall, if SOFR falls to 100 basis points and we're able to reduce our dividend rate from 10 to 6, you can see the amplification goes from 2.6 to 3. And you can see that as the credit improves of the company, the amplification increases. And then if we consider the next slide, when you actually combine leverage with credit, if you actually get to 50% leverage and and the interest rates fall to 5%, or if your credit spreads compress to 5%, this equity is providing 9.9 times Bitcoin. So the BTC factor goes almost to 10. And so you can see the blue zone is where you're 2 to 4x Bitcoin, and the green zone is just 4 to 20x. It's screaming. So what is the universe of assets that would be interested in MSTR? Well, it's the S&P 500, it's NASDAQ, it's the Mag 7 investors, it's Bitcoin investors. And as you can see, MSTR is outperforming all of those competitors right now. And so if what you want is the Amazon of digital capital, then that's strategy. Now, the question in your mind is, can you actually go to 30% leverage or 40 or 50% leverage? So let's look at the credit model. So here we go. This is the existing capital structure, assuming the 40 vol and assuming 0% Bitcoin return.
According to Saylor, Bitcoin is digital capital, and Strategy's mission is to keep accumulating it through a mix of direct purchases and structured credit products like preferred stock and Bitcoin-linked securities. He argues that even holding up to 7% of the total Bitcoin supply would not be excessive for a public company leading the digital asset revolution, and Strategy already owns 628,791 Bitcoin, around 3% of all coins, while its recent $2.5 billion Bitcoin-backed issuance became the largest IPO of 2025. With revenue hitting $114.49 million in Q2 and a 19.7% BTC yield, Saylor projects Bitcoin could deliver 30% annual returns for decades, positioning Strategy as a bridge between Wall Street and the digital economy, and reinforcing his core belief that the future of wealth is Bitcoin. The question is, how high will Bitcoin's price climb once the rest of the market fully embraces what Saylor already sees coming? If you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.